So maybe you've just graduated and you're talking to your new colleagues and they're asking you, who did you get your disability insurance policy from? Or maybe you've been practicing for a long time and you've never had the coverage. Or you had the coverage and along the way you dropped it, which is why you need a new one now. In this video, we're going to talk about how to properly design a long-term disability policy for physicians, what to look out for, what you must have depending on where you're at in your career. My name is Amel Esquini and this video starts right about now. If you haven't subscribed to my channel, I'm going to urge you to do so right now. Not only are you supporting me by doing that, but you're also joining a platform of substantial and constantly updated information about insurance that you can use as a reference at any time. So click on that subscribe button now. So what if you just started practicing? The first thing you're going to want to look at is what is being offered to you through work. If you're going to be joining a physicians group or you're going to be joining a hospital and working for them, you're going to want to find out what kind of group long-term disability coverage is offered through them. Because even though in no way are group policies ever comprehensive coverage for you, they are indeed the cheapest coverage. And let's face it, if you just graduated med school, there's a really good chance you have a massive student loan and that is your priority. However, don't just settle for the cheapest thing out there. You gotta trust me with this one. Now take a close look at the disability insurance policy offered through work. You're gonna wanna understand what is the definition of total disability. And this is key because this is what's going to determine how you're eligible for benefits and if you can't do other gainful employment, because I've never met a doctor that told me if I become disabled, I don't want to do anything at all if I can't practice medicine. You're always going to typically want to do something, and whether that's writing a book and benefiting from the proceeds of those sales, if it's consulting for other doctors, selling real estate, whatever that is, you want to understand if your policy allows you to do something else and still collect the benefit. Another thing you want to consider is how long are they going to pay you for? Are they going to pay you for 2 years, 5 years, to age 65, to age 70? How long are you going to collect that benefit for? And the other thing is, how much is it going to pay you? That's the part that people care the most about, right? How much of my current income would I receive if I can't work at all? So based on that, you got to look at your group policy and see what it is that they're offering. Some companies will do up to X amount of dollars based on your income, let's say $8,000, for example. Some companies will say up to a X amount percentage based on your salary, and that can be 50 or 60% of your salary, for example. Regardless of what it is, you gotta understand if your employer is paying for this benefit, if you start receiving payments because you become disabled, there's a really high probability that this benefit will be taxable to you because it's paid by your employer. I'm not an accountant, but I can't stress it enough. If your policy is going to pay you 60% of your base salary and you're having to pay taxes on that income, you're not really getting 60% anymore, are you? And so that's where individual policies come into play. And I think you should work with an agent that will coordinate those two policies. You want to coordinate your individual policy to pick up where the coverage from work falls short. I know way too many agents that are going to try to upsell you. And let's face it, doctors are busy. And a lot of times you guys don't like talking about this and you don't take the time to digest everything. So just my point is, if you have something through work, just get your own private insurance to supplement the policy at work and have them work together, not overlap in coverage, because that can be problematic at the time of claim. Then again, if you're just starting out in your career, you're probably young enough where it makes more sense to have your comprehensive individual disability insurance policy over the one from work, because you're going to be locking in your rate and locking in your health. And if you choose to go this route, these are some things you need to consider. The most important thing is, what is the definition of total disability? And this is a video on its own. I have one. When you're done here, you can click on that so you can get more clarity. But you want to understand how your diagnosed disability is going to trigger your benefits. Things like, am I considered totally disabled if I can't do any work at all? Am I considered total disabled if I can't do the particular duties of my occupation, my specialty, but I can do other things? You want to know what is considered totally disabled. Like, for example, maybe you're a surgeon and God forbid you develop tremors in your hands and now you can't do surgery, but it doesn't mean you can't be a physician and do medical consults. So you want to understand if you would still be able to collect benefits even if you had that type of disability. And with most policies at work, this is either a limited option or not an option at all. Some policies offer the student loan repayment rider, and this is huge because if you become disabled, it doesn't mean that your student loan is forgiven. In fact, becoming disabled is the #1 ticket to accumulating massive amounts of debt, and it's also the #1 reason for bankruptcy claims in the United States. So if you have this option available, consider taking advantage of it. The third thing you should consider is, if you're under the age of 50, try getting a non-cancelable policy over a guaranteed renewable. What does that mean? And again, I have a whole nother video on this, but basically under the non-cancelable policy, the insurance company can never increase rates. It's locked in. Now, some people don't care about this as much, but when you're young, the price difference is minimal. If you like this video so far, give me a thumbs up and let me know if you need clarification on something. I know it's a lot of information and it's really hard to get in all the little details in just a few minutes, but I will answer any questions you leave in the comments section. I'm also going to put my email on the description so that you can email me directly if you have a question. Over the last 9 months, I've gotten a ton of calls from physicians over the age of 55 wanting disability insurance coverage. And it's been because either they had a policy for a very long time and they dropped it because all of a sudden they thought they didn't need it and now they want it again, or they had coverage through work and now work doesn't offer it anymore, or they need a higher benefit because they make more money than what they did 15 years prior. Whatever the reason is, you should know that with almost any insurance, as you get older, the premium increases. As you get older, your health begins to change and it's typically not for the better, which is why people over age 50 tend to think more and more about disability insurance. I've also gotten calls from doctors that they thought they would retire at age 65, but now they either can't afford it or they don't want to, and they're planning on working through age 70 or however long they want to, and they're trying to get coverage. But as you get older and your health begins to deteriorate, it gets harder to get coverage and it also gets more expensive. If you're in this group of physicians over age 50, consider these tips that may save you money on your premium. #1 is the elimination period. Choose a longer one. Most people choose a 90-day elimination period. Great. But if you have enough emergency funds or you have enough liquid funds to help you cover your bills during the first 6 months of a disability, consider choosing a 180-day elimination period. It will save you money on your premium cost, but also you have the funds to supplement you in that time gap or that time frame. You may also have short-term disability through work, and that will cover you during that period as well. If you're working with a good insurance company and they have a good history of not raising rates, consider the guaranteed renewable option over the non-cancelable option. Yes, they might raise your rates later on, but they would have to do it for your entire health class and occupation class. And considering that you're closer to phasing out in your career, the savings and the premium costs may actually be worth it for you. I hope you enjoyed this video. I put some links on the bottom that might be helpful. Be sure to click on the bell button so you can be notified when I upload my next video. Stay safe, stay healthy, and thanks for watching.